Hello, my VetaVA community friends. My name is Hammer, and I am here with your December 13th mortgage market update, letting you know what's going on in the mortgage market, what's going on with mortgage rates. Hope y'all are having a fantastic holiday season. I know how hectic everything can be. No guest today. It's just me flying solo. If you are here today, please go ahead, give me a hashtag live in the comments. Let me know that you're here. Say hello. Remember that if you've got any questions or any comments, glad to answer those for you today. If you are watching on the replay, we also appreciate you being here. I know that many of you can't make it live, but we do see from the numbers that many of you do watch on the replay. And if you're a regular, if you're watching this today on that replay, do me a favor, make my heart sing. Just go ahead and put hashtag replay in the comments just to let me know that you were here. And remember, we do monitor this post. So if you have any questions, go ahead and ask them or share your thoughts, and I will be glad to go ahead and answer those for you. So with that said, let's jump right into what's going on with the rate stuff. Remember, when we talk about rates, this is not an offer to lend. And when we talk about rates, we're talking about averages and generalities. You always want to make sure you're shopping around, but this is just to kind of keep you grounded and give you a starting point. So rates since last week have held about the same. Generally, really not that different. If you got a rate quote last week, you should be getting a very similar rate quote this week. Maybe a little bit worse on the credit pricing, if you will, but the generally rates are about the same. That means that VA rates for a VA mortgage generally in the low to high sixes, meaning you're going to see a variation based on, lender to lender. There's going to be a little bit of a difference sometimes, but oftentimes it's going to be for your unique situation, your credit score, and, your lending profile. Now, if for any reason you're not using a VA mortgage and you're going with what we call conventional mortgage, conventional rates are higher and they average in the sevens still right now, generally low to high sevens, depending on credit score, amount of money down, and a few other different variables. All right. So overall, if you're doing a VA mortgage, you're going to see rates that are in the sixes. That's very much on track with normal. Same thing for rates in the sevens otherwise. As far as what else has happened since last week, unfortunately, labor market data that we got last week did not show a softening in the labor market, which would have helped rates. So therefore was not helpful to any lower rates. Also, yesterday's CPI inflation data we got yesterday also did not come in better than expected. It came in as expected, but that's not good enough sometimes. It wasn't better than expected. So that's also not helpful to lower rates. Now, for those of you that watch on a regular basis, I was really hoping that we would see rates continue to drop as we headed into this December. And in order to see that, we were looking for three major events. The first one was that labor data from last week. We were looking for signs that the labor market is softening. The reason that helps mortgage rates is that if the labor market is softening and if the economy is slowing down, that means that all of those rate hikes that the Fed put into place are working. And the problem is, once they start working, it's kind of like slamming on the brakes on your car. If you don't let off your foot, well, you're going to come to a complete stop. And the Fed does not want the economy to come to a complete stop. So they're looking for signs of economic slowdown, of things slowing down. And one of those signs is if there's less jobs created, if unemployment starts to go up, if wages start to decline. And the readings that we got last Friday, none of that happened. Unfortunately, or fortunately, depending on how you want to look at it, right? Because it's good that we have a strong labor market. It's just not good for lower mortgage rates. But it is, for overall healthy. Nobody wants people to lose their jobs, right? So the labor market data last week, that was one of the three items. And that one, we're going to call that at bat. We're going to call it a whiff. We're going to call that one just a straight up whiff. So the second thing that we had happen was yesterday's CPI inflation data. That data, we were looking for signs that inflation continues to ease down. Unfortunately, although it came in as expected, it was a little bit higher than the month before. Inflation is getting better over time, but not better necessarily month by month by month. Now, if we saw signs that inflation was really starting to creep lower, that would have meant, hey, the Fed can look to maybe cut those Fed rates that they've raised so high and that would improve things. Now, it's important to note the Fed does not set mortgage rates. However, the Fed does set what's called the Fed funds rate. And that Fed funds rate is kind of the starting point for rates throughout the economy. Your car loan rates are going to be based on that Fed funds rate. Your borrowing rates, your credit card rates, your home equity line of credit rates, mortgage rates, all these other rates are affected based on the moves that the Fed makes. Now, we're not waiting for the Fed to actually increase or lower those rates. It's the speculation, the expectation that it's going to happen, and markets react to that now. That's actually what affects mortgage rates. So that brings us to where are things going from here? What is our rate forecast? Let's take a look together and we'll see. If we take a look here, as far as where we go next, the worst rates should be behind us. Remember, October, that was when we saw the worst rates. Hopefully, we don't revisit that, and it's very unlikely. Things are looking good right now. Rates are now likely to hold steady for a while. They may creep up a little bit. We don't have to worry about rates going too high. However, we've seen rates really come down over the last 6 weeks. That's kind of come to a halt. We're not seeing that anymore. Rates have really started to level off. And in order to have seen rates improve, we would have needed to get more help from those other two events that I just talked about. The first one being the labor data from last week. The second one being the inflation data from this week. So today, all eyes are on the Fed today. The Fed has a Fed meeting today. And at that Fed meeting, it's very unlikely that the Fed will raise rates today. Now, what I have on the screen in front of you here, something for us to look at together. This is what we call the Fed futures chart. And basically, this is how markets are betting on the probabilities of where the Fed will have that Fed rate over the next year in their Fed meetings. Now, this meeting today on December 13th, it's almost 100% expected that the Fed will leave rates unchanged. This will mark the third meeting in a row where we've actually had rates that will have been unchanged after raising rates over 18 months. I think they raised them 10 or 11 times. I'd have to double check, but we've seen mortgage rates go up along with that Fed funds rate since March of 2022. So things are finally leveling off. Right now, expectations are good that we're going to see the Fed hold steady. The question is, when will the Fed start to cut this Fed funds rate? And it's going to happen sometime in 2024. Markets are going to be listening to what the Fed members have to say today. The Fed is going to release a policy statement at 2 p.m. Eastern time. If they were going to make any changes to that Fed rate, because they could increase it, they could leave it alone, or they could decrease it. They could cut it. Most likely, almost 100% expectation that they're going to leave it right alone. But the Fed's also going to come out and they're going to release their forecast from all the different members. And there's either 18 or 19. I believe there's 19 members. And they're all going to anonymously put a dot on a chart saying, where do they think that we're going to end those Fed funds rates for the year on 2023, 2024, 2025, and I think 2026. Now, those far, far future forecasts, they're not worth anything. We don't even worry about that. But where's 2023 and where's 2024? Markets are going to be paying a lot of attention to that. Last time we did this chart, the Fed does this anonymous forecasting every quarter. They do it once a quarter. The last one was in October, and that one expected that we were going to see 2 rate hikes. Actually, it might have been September. And we were going to see 2 rate hikes by the end of the year. We've only gotten 1. So now it's expected that the newest forecast will show that there's no more expected rate hikes this year. But does the Fed expect to lower rates next year, and by how much? And that's what markets are going to be looking for. The next thing we'll have is at 2:30 p.m. Eastern time, we're going to have a press conference, and Fed Chair Jerome Powell will take questions. And he generally has a lot of effect on mortgage rates because he's going to be answering the media's questions on where they think things are headed, what's going to come next. If markets think that the Fed is likely to cut rates as soon as maybe the March meeting, there's another meeting in January, and then the next one will be in March, well, then mortgage rates can improve a little bit. But that's unlikely because we didn't get the labor market data we wanted to see. We didn't get the CPI inflation data we wanted to see. We're not likely to get any real improvements at this Fed meeting. If we had, it's kind of like a math equation. Good plus good would have equaled good. But because we got whiff plus whiff is likely to equal whiff. So it's very unlikely we see that many changes. But if you're out there house hunting right now, rates should be pretty stable. We've seen some of the best rates we've seen in 2023. I mean, well, probably not. I'd have to go back, but no. But best rates we've seen in a couple months at least, right? Worst rates were in October. They've come down a bit since then. We're likely to see rates kind of continue down through into 2024. Not super quick though. So to wrap up for you today, basically rates are likely to hold steady or move slightly higher over the next couple of weeks. We're not, as we get into the holiday, we're not likely to see too much movement in interest rates. Things should be pretty steady to end the year. It's unlikely we see a lot of change. If you're, looking at a home right now, you shouldn't have to worry about rates moving significantly higher, but you're also shouldn't be holding your breath waiting for them to drop lower. Now, over the next few weeks, we were hoping to see rates improve based on that labor market data, the inflation data, and this Fed meeting. That's much less likely to happen now. So rates are not likely to move lower unless we get new favorable data in January. We kind of start this whole thing over again. So we're going to get more labor market data at the beginning of January, another inflation report at the middle of January, and then we'll be waiting to see if we've got any chance of improvement. In longer term, rates will likely move lower as we head into 2024, but they're not going to go too far. So anyway, that's it, my friends. That's all we've got. If you've got any questions, please put them down. I'll be glad to answer them for you. Otherwise, that is your mortgage market update. Remember, I do this live every week, every Wednesday. You can feel free to join us. Let's see here. I'll throw this up on here. Join me each week to discuss mortgage rates. We got 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. Do me a favor. If you have been watching this show at all and you found it to be at all useful today or any other day, just make a note in the comments. Say, I love it, or I like it, or it's useful. Let us know. Let me know that this is doing something, that the time I share with you all and the things I try to share, that they're helpful. So if you find it helpful, just let me know in the comments. That's the only Christmas gift that I am asking for. All right, my friends, I'll see you next week, and that will be the 20th, and I will be here. So have a fantastic day, and I'll see you then. Bye-bye, everybody.